Okay, everyone, how's it going? Super excited for today's video. We're going to give an update on Delta Airlines. All right, the reason being is it has earnings upcoming. All right, now pay attention to this gap down below. These gaps fill 90 to 95% of the time. If you don't believe me, look at another example here of the most recent gap. And we went ahead and filled that gap nicely. And that was nice returns from below 30 all the way up to about 35. All right. The next thing I want to highlight is initially a year ago. Okay. A year ago, I was charting this pattern known as a bull flag. All right. And that's what we have. We have our flagpole here. And then we have the actual flag itself in this formation here known as a bearish channel. Market sentiment has changed tremendously. All right. Meaning that I am not so bullish on this bull flag. But if you were into enter some bullish positions, okay, now is around the time. Okay, we could drop lower to test this trend line before earnings, but notice how we have bounced one time here, two times here, and we could possibly get a third bounce along this bearish channel trend line to the bottom. All right, now in my opinion, 2757 is a key breakout level, especially on the weekly chart, meaning that if we were to break below and let's say retest this trend line up here to 2757 and then come back down, the gap fill seems much more likely. Okay, we have a gap fill here right around $25. Okay, let's call it. All right, so in this bearish channel pattern, we actually have a little bit of a bullish pattern known as a descending wedge. Okay, this is where we can consolidate in between this pattern until it gets tight, super tight like it's doing for a possible breakout to the upside. Now, personally, I think that 35 is going to be a very strong resistance point. Okay, so if we were to get a breakout above this trend line, specifically right here on the descending wedge, okay, we need to be cautious of this trend line here, which is the basically the halfway point in this trend line. Okay, so we could have a false breakout here, okay, to this trend line and then come back down below. All right, potentially finding support along this level. If we were to break this trend line here, we have three take profit zones to the upside. Okay, they're going to be 35.7, 37.89, and 40.67. Okay, I honestly do not see this crossing above this bearish channel right here. And notice how the 161.8 retracement on the fibs is also lining up with that level. Okay, so I wouldn't look for a perfect wedge pattern breakout all the way up to 46.42. That's highly unlikely, along with the price target of 48.71 in this bear market. Okay, but nothing can surprise me anymore. Okay, we've seen multiple stocks just rally for no reason, and then we've also seen multiple stocks drop 90%. All right, we are living in unprecedented times where the S&P actually retraced more than 50% of its bear market rally. All right, and then we actually made a lower low. All right, that's never happened before. So we are actually living in historic times that people will speak of for decades. Okay, it's 2022. In the year 2080, all right, people are still going to be talking about the initial COVID crash and then the bear market that followed as a result of the irresponsible Fed market just printing trillions of dollars and then saying inflation was transitory. All right. So we have to keep all of those things in mind. Again, 2757 is going to be our breakout level to the bottom, where we have a price target of 2241 and then 1585. All right, many stocks have dropped 20% on earnings. All right, just look at Carnival Cruise Lines. Most recently, it had earnings this past week and dropped as low as 22%, about 23% on its earnings before it did recover a little bit. But you have to keep that in mind. Okay, there's no reason that a stock can't drop 20% And if we were to do so, okay, let's say we do get a little short-term bounce and get rejected along this trend line. All right, ultimately, once we break this bearish channel trend line to the bottom, along with this descending wedge trend line to the bottom, things are going to get very bearish very quickly. And we know that 90 to 95% of the time, these gaps fill in the market, and we have a very clear gap, okay, right around the 25 price level. Okay. At the time of this recording, Delta Airlines is $28.06. We may see things continue bearish, or we may get a look below and fail of this key support level 27.57 and head back up towards this trend line. All right, so two very key patterns. All right, we're looking at the bearish channel overall, super bearish. We do have a bullish pattern known as a descending wedge, but it's not validated until we are able to break above the trend line. And ultimately, we're going to need to break, between the 50% level of this bearish channel. Once we do so, we have valid price targets to start taking some profits at 35.7, 37.89, 40.67. And if a miracle happens, we could hit 46 or 48.71. All right. So I really appreciate you guys watching the video. Thank you for watching. And make sure to comment below if you were able to spot the divergences. Okay. I didn't point them out in this video, but take a look at the ovals. All right. We have an uptrend line here. We have a downtrend line here. This indicates future bearish activity. And sure enough, we drop from 37 all the way down to 27. All right. What we're seeing here is a little bit of bullish divergence where we have a low and a higher low here. We're continuing an uptrend on the RSI, as slight as it may be, but go ahead and look at the price action on the stock itself. We're making a low and a lower low, but making a low and a higher low on the relative strength index. This indicates that we may possibly see some bullish activity in the future, combined with a bullish chart pattern. All right. So the technicals are very important to pay attention to, but the fundamentals are also just as important to pay attention to. All right. So we're having a little bit of conflicting data where we're seeing, overall, we can see that we have a low here and a higher low here. All right. But overall, we have a low here and a lower low here. This is not the most bullish, right? So on a more long-term trend, we have bearish divergence. On a shorter trend, we have a slight bullish divergence. All right. So always keep that in mind, and pay attention to those gaps. All right. Those gaps are very important. And in bear markets like these, we tend to see the gaps down fill. Okay, because as algorithms correct themselves and most institutional and hedge funds traders, all right, they're computing everything by algorithms, right? When you're in control of billions of dollars, you're not going to leave everything in the hands of someone, an individual person, right? You're going to actually try to set yourself up best for the best case scenario. And what they're doing is they're setting algorithms, right? So maybe they also have a sell signal below 27.57. And if we see algorithms start to sell below our breakout level below 27.57, it's very possible that that gap is going to fill and potentially head down lower to the 22.41. Now let's say algorithms determine that, okay, well, not only did we get good earnings, but let's say also a good CPI report comes out, okay? Because we have CPI coming out soon, along with PPI in October, over the next few weeks. If this was to happen, right, you may see a couple weekly candles break out from this pattern and again head up to this area right here. And if we break out from here, potentially back up to 35.7, 37.89, and 40.67. Nothing will surprise me anymore in this market, and nothing should really surprise you as well. But hopefully you found some value in this video. If you did, make sure to like, subscribe, and comment down below if you have a specific stock you would like me to analyze for you, because I do viewer requests every single week.